Our guest today is Tenke Zoltani, founder of Better Finance. Tenke competes as an elite distance runner, having run for Columbia University, won the Hungarian National Mountain Running Championship, and even competed in the World Championships. She also traveled to Antarctica on a research vessel to study environmental change and seek investment opportunities to combat it. Tenke has helped world-renowned investors deploy $2 billion into impact investments and has been a solopreneur for over a decade, launching Better Finance before sustainability was mainstream. She was a financial advisor on the pioneering Rhinoceros Conservation Bond and the first global fund for Coral Reefs. Let's hear the confessions of this sustainability solopreneur. And here she is.
I joined a startup, a pioneer carbon consulting and trading business. Too ambitious, my boss told me. Soon after, I was headhunted to join what is now one of the largest commodity trading companies in the world. I worked briefly in biodiesel trading, but the absurdity of winning and losing millions of dollars a day, usually thanks to volatility and wiliness, while half the world got by on less than $3 a day, didn't escape me. Too ecological, they said. These experiences were valuable. They taught me that I really struggled to align myself to others' expectations. And I learned what was valuable to me was finding mission alignment, both in work and life. And this meant that for the time being, I was on my own and unemployed. I went to the Swiss unemployment office and explained the kinds of jobs I was looking for. "You mean you want to be a climate scientist?" they asked me. The timing was too early. The public wasn't aware and investors didn't care yet about sustainability. It barely registered a headline. Some understood the risks of getting sustainability wrong, like the Volkswagen emissions scandal or the Rana Plaza collapse. But few understood the opportunities of getting it right, the potential alpha. I set out on my own. I'm scrappy. I found 3 clients who were mission-aligned and betting sustainable finance was the future. One of those, Lombard Odier, is a market-leading bank today in sustainable finance. We bet that development finance, through a fund-to-funds model, using microfinance, would resonate with investors, and it did. UBS was the first bank to take notice of the track record I had begun to build. They gave me carte blanche to build an impact investment advisory in-house with their ultra-high net worth client. It was a hit. But you're not scalable, they said. And they were right. The banking model is driven by fee generation, from selling products, trading and execution, and primarily in liquid markets. They were afraid of the outflows, that clients would take money out of the bank to invest in opportunities that aligned to their values, and find ways to co-invest alongside like-minded individuals. The model I identified didn't fit into a banking model. It was based on patient capital and relationship strengthening, which would ultimately lead to inflows, more assets under management, and then grow to be far more impactful and lucrative than short-term bonuses and short-term fee generation, but the bank didn't care. I felt like I had cracked the code. There was a clear demand for what I was offering, a need in the market for advice on investing impactfully and deep subject matter expertise. And being on my own, I was nimble, I was agile, I could react to the latest developments in ESG and sustainability, help identify these opportunities in clients' own portfolios. My job was to find those people, companies, families that were eager to put their wealth to work for a triple bottom line: people, planet, and profit. And I found them. I realized that if I had identified demand amongst a very small group of investors, there were likely to be more out there. I structured the world's first investment into rhinoceros conservation, created innovations for coral reef insurance that protect coastal communities, and worked on the Global Fund's blended finance strategy to combat AIDS, malaria, and TB. I transacted private equity deals for next-generation asset owners that wanted to invest the wealth they were inheriting into mission and socially aligned businesses, whether for artisanal coffee producers like Boreal Coffee here in Zurich, or companies synthesizing human breast milk to improve infant nutrition and combat cognitive decline. Deep knowledge and subject matter expertise became my superpower, and agility was my strength. Investors wanted to connect to advisors that shared their values and vision. It didn't make sense to sell out to a large consultancy that had a brand but no substance and was slow to react. I had a few offers of partnering with boutiques, but what clients were paying for was me. They didn't want a junior analyst. They wanted to be heard. They wanted a sounding board. And this was especially true for some of the women I worked with. As data was coming out on the disparities women face, like the gender pay gap or motherhood penalty, I helped identify these opportunities in clients' portfolios where women could really benefit. I tackled gender lens investing by putting in work for free in order to learn, joining the board of a first mover foundation dedicated to gender lens, pioneering new models of innovative finance for women in East Africa. The foundation became an industry leader, and the space has carried through to today, with the work becoming mainstream. The business case for supporting women has become clear, as an economic driver, as a mitigant of risk. Now you'll see gender criteria embedded in every due diligence opportunity and ESG screening. Very early on in this process, I learned to stop preaching the gospel of impact and approaching those that innately wanted to create more sustainable businesses. It wasn't my job to convince others, and of course the vast majority of investors still didn't care. Roger Federer was recently quoted at a commencement address at Dartmouth, saying that even top-ranked tennis players win barely more than half the points they play. When you lose every second point on average, he said, you learn not to dwell on every shot. Looking ahead to next year, ESG assets are expected to account for more than a third of global AUM. What this means is 53 trillion, or twice the GDP of the US. What was considered a niche when I started out is now a tidal wave sweeping the investment world. And even governments have picked up on impact investing. I became an advisor to the UN when the organization lacked financial expertise. We took a bet that countries facing fiscal difficulties in the face of COVID would build lasting partnerships with entities and institutions there to support them and help manage their debt sustainably. Since I joined, we have built one of the world's most impressive track records, delivering now 30 billion in emerging market sovereign thematic debt issuances. What that means are bonds that deliver development outcomes for the global south. And recently, I won a mandate from global technology leader SAP to build their impact investing strategy. Why did you hire me? I asked them after 6 rounds of interviews, knowing that large consultancies had bid for the work. You're scrappy, they told me. We know you'll do the work yourself. It won't get outsourced to someone who doesn't share our vision. With SAP, I've had the opportunity to work on Sustainability 4.0, human rights and supply chains, and the just transition. The ILO estimates that a just transition to a low-carbon economy has the potential to create more jobs than it displaces. While some jobs in fossil fuel-dependent economies and industries will be lost, a just transition can create 80 million new jobs in sectors like renewable energy, energy efficiency, and green infrastructure. The clients I have the privilege to work with today are, like me, quietly shaping our future economic system. You won't see their names in headlines, but you'll see them catalyzing change, using every dollar they invest as a vote in the kind of future they want to see. When I founded Better Finance, my mission was to prove that investments could do more than just grow wealth. They could foster change, empower communities, and protect nature. What I learned along the way is that you don't need to scale. You don't need to scale to make money, and you certainly don't need to scale to make an impact. Thank you.